So we're going to start out with what everybody likes to see is the tax brackets. They were brought back to what they were. It's a favorable change for most people. And this is the dividends and long-term capital gains. So again, there is a zero bracket for each category, and most people fall in the 15%. If you're real high income, over 518, you fall in the 20%. If you're single, 583, 20% if you're joint. But the majority of people do fall in the 15%, which is normal. Standard deduction did go up for everybody. So everybody got a higher standard deduction in 2025. This is where this comes in. The one big beautiful tax bill, anybody over 65 gets an extra $6,000. Now, obviously, like everything else, there's a limit on that. And if your income is over 75,000 for singles, 150,000 for married, it starts phasing out. You don't lose it completely. It starts phasing out, and it does phase pretty slowly. Estates and gifts and trusts. We talk about this every year, and the reason is I just want everybody to realize the tax rates for estates and trusts when you write your trust. And for some reason, people want the simplistic way and they want to have the trust pay the tax. But if you look at these rates up here, I mean, you get up to 35% just by being over $15,000 in taxable income. So imagine to be in a 35% tax for an individual, you have to be over about $400,000. So that is why it doesn't really make a lot of sense to make the trust pay the tax. It really should be the individuals, the beneficiaries. It makes the most sense. It is kind of cumbersome sometimes when you have a lot of beneficiaries of a trust. And trust me when I say I've seen trusts that have 30 beneficiaries. It can be cumbersome, but generally those 30 beneficiaries are in a way lower tax bracket than the trust. The annual gifting exclusion did not change from 25 to 26. It's $19,000. The lifetime exemption is 13.990. And what this means is if you were to die, all your assets together, if they were worth more than that amount, you would have to pay estate tax. Most people now, if you're married, you can choose to file together in that exemption amount and double that amount. Even if one dies before the other one, you can make that election and file that election together if you think your assets are more than that amount. So a lot of people choose gifting as a way to start getting rid of some of the money that's in their possession. Couple options. One is you can gift below the $19,000. So if you're married, you can each gift $19,000 to any child, any grandchild. The other option is you can gift more than that and just file a gift tax return. So when you file a gift tax return, you're simply stating, I gifted more than $19,000 per me and my spouse. If you're single, I gifted more than $19,000. You don't pay tax on it. You don't get a deduction for it. The person you gifted it to does not pay tax on it, it's just telling the government what you did. The only thing that is a potential problem is if you're taking that money out of an IRA, keep in mind that it is taxable if you take it out. If you take it out